Okay, so I'm going to get going now. Welcome to Let's Talk Tech, the AI Dome. If I could just ask anyone that's not presenting, if you could go on mute, that would be really helpful. Yeah, you'll find mute in the bottom on the bottom left side. So if you could just click mute, that would be brilliant. If you want to ask questions, please do so at the end of presentations and just raise your hand in the system, and then I will organize who gets to ask the questions in which order, if that's all right. We've got quite a lot to get through in an hour and a half, so we're going to have to move fast. We have a standard approach, which is for all the presenters. It's around 5 slides, 10 minutes, and a 90-second demo. I'm going to try and do my slides even faster because we've got a very slightly longer demo for VentureFactory, which a lot of the people here have asked for. I'd like to thank, first of all of you that have come. There's people here, both speakers and audience from all over the world. So thanks a lot for joining us. And thanks to all our presenters and those that have helped us to organize. The agenda, which you can see here, is we've got 2 kickoff presentations. We then got 5 startup showcases. And we wrap up at about 6:30, depending a little bit on questions. If any of you want to present at the next Let's Talk Tech, then please sign up to the VentureFactory. It's free to sign up and explore, so please sign up at the VentureFactory at www.lets.group. That's lets.group, not letsgroup.com, lets.group, please. And you can message us through the feedback system, which you'll see in the platform. Okay, so I'm going to just give a quick intro to LettsGroup's AI Venture Factory. First, I'm going to talk about the venture building paradox that we have today. So the current model is ad hoc, and so each startup is built differently, dependent on the founder's skills and experiences, and it's still far too dependent on analog processes. As a result, failure rates are way too high. 80% of startups in the UK fail within their first 5 years, and it's highly inefficient. It's both expensive, slow, and dependent on far too many fragmented tools, which is why the #1 reason why startups struggle is always pinned back to execution issues. We built LettsGroup AI Venture Factory over the last few years to be the true end-to-end operating system for startups that solves the problem. As a result, it was built all along as AI native. As a result, startups can scale through AI much more than they thought possible, dramatically reducing cost to build with higher speed of delivery. We've seen through the data already in the last 2 years that the old metrics seem to be dying, and they're on the left-hand side. You can read them for yourselves. On the right-hand side, we've also seen, even more interestingly, new metrics emerge from the data we see across our platform. First, teams are no bigger than 5 people past scaling, which means past Series A. Idea to traction in less than 12 months, well less than 12 months. All sorts of outputs now just come in the box, particularly in VentureFactory. And almost all tasks and outputs are AI generated. And our AI co-founders today trigger and manage them for you. The VentureFactory is trying to be the startup building sat-nav to self-driving system. Whereas others today, anything else guides founders, we build for them. And the platform today delivers a complete step-by-step venture building system, which we call the map, with now a startup intelligent agent that is your sat-nav. And added to it, our new layer of AI co-founders has created the self-driving company earlier than we thought, and certainly earlier than the markets thought. What this means is our startup users can focus 80% of their time on product and customers, while VentureFactory handles the rest. And that's why they can be more successful. And you scale with our tech from day one to give you scale up infrastructure through our tools, apps, and agent store. This has already delivered across our platform. We see a 90% reduction in the build cost for startups. The average seed used to cost 2 million to get to seed. Now it's about 200K in our environment, and a 10 times faster time to market. Months of work condensed into days. The support landscape is also changing. The old way, the traditional way, is mostly around advisors, mentors, accelerators, venture studios. Often a little slow, ad hoc, and costly in this new environment. And we're starting to see experts moving to the VentureFactory with our new agent to expert tech we're about to launch, or we're launching. So if you are an expert here, or if you're a creative entrepreneur, you can sign up for VentureFactory today. It's free, but sign up. And the new way, we think, can deliver 5 times the productivity improvement, 2 times improved success rates, and much faster time to market. And we're seeing it with our users. So 2024, we were in alpha, about middle of 2024. 2025, we were in early private beta. End of 2025, we started opening up. And we are on track already for hundreds of users in 2026. And we expect thousands in 2027. With that, I'm going to switch to a quick demo so you can see how this works.
Welcome to LettsGroup's AI Venture Factory. Today, we're going to be showing you how to automate building your startup in VentureFactory. We're going to start off by using the startup intelligence to find and execute an important step in our venture building process. I'm going to ask startup intelligence to find a relevant step in Innovate Framework, to design my website homepage, and execute that step, and then save it to our venture assets in the VDR. When I send the message to startup intelligence, it begins working straight away to determine what I want, if it should respond in a text form, or if it should begin taking actions on its own. Startup intelligence has found an appropriate step and is executing it. As you can see, it's navigated me to that step, step 17, and is executing that in the step developer. It's also instructed me that it's going to create an output, which will come out here. And then once the output appears on the screen, I'll be able to click Save to VDR, and will permanently store my new homepage design blueprint in the virtual data room, the VDR. This has been completed. We can see the output is here. It's giving me a full instruction for designing the first prototype and homepage. And I can click Save to VDR at the top here and have it appear in my venture assets, step 17, prototype. Now, I can automate this further by using VentureFactory's AI co-founders. Co-founders are AI agents that work autonomously to automate tasks within VentureFactory. To automate a task for one of my AI co-founders, I create a trigger. This trigger will fire 9 a.m. every Monday and instructs the agent, similarly to Startup Intelligence, to find the next uncompleted step in the Innovate framework, execute it, and then save that output as a venture asset in VDR. This automates my development through the Innovate framework and saves all work into my VDR as new venture assets, just like step 17. Thank you.
Okay, thanks for that. Okay. So what we're going to do, if that's all right, is save questions for LettsGroup VentureFactory. If you dribble them through as we go along, that would be great after other speakers. I'm now going to hand over to Struan, who's going to give us the investor perspective from Cambridge Capital Group.
Thanks, Philip. I've got a slide. Can I put it up?
Go ahead.
Can you see that? Can you see that?
Not yet.
There we go.
Smashing. Okay, cool. I was just about to get you some support, but looks
How's
like
that?
you're right. We can see that.
Okay. Thanks very much for inviting me. I'm going to talk a little bit about our experience as what I think is now England's oldest true membership-based angel network. Last year, we had our 25th anniversary. It seems incredible, and the speed of these markets, which you're talking about. But of course, in angel investing, early stage investing in general, the cycles are long. Yeah, the last time we did analysis, average exits took 6 or 7 years. So once you get into the game, you're in for the long haul. These are the headings for my short talk. Just some thoughts really from all that experience over 25 years working with a great group of private investors. Quick bit of background. So we started as a friends and family syndicate all those years ago. We've grown into a well-established private network business. We've done more than 175 deals over that time, with 25 exits to date, and investing in probably 10 to 12 new companies a year at the moment, specializing in high-tech B2B, but across the board, everything from hardware and medical at one extreme through to purely digital in the areas that most of you are interested in at the other extreme. We focus on pre-seed, early stage, under the EIS tax incentive scheme here in Britain. The main role of the group is to systematically screen the hundreds of deals that come to us from various sources and showcase the best we can find for our members at our events, both online and face-to-face. We have a direct investing model whereby the members, our clients, invest directly as a syndicate in the underlying companies. And our experience has really mirrored the growth of the whole ecosystem sector through to a mainstream alternative network these days. And the numbers reflect that. Apparently, in Britain, £2 billion is invested in early stage investments a year at the moment. And the angel groups are doing about 600 million of that. So it's pretty significant. It peaked in 2021, but has stabilized since then. Also, one can mirror the development of the broader ecosystem with incubators, accelerators, initiatives such as Let's AI VentureFactory. And that mirrors the rapid growth of the number of startups, both in this country and wider afield. And the fragmentation and diversification of sectors, which 15, 20 years ago we hadn't heard of. Clean tech, SaaS, fintech, AI, and so on and so on. Angels, are they angels, dragons, or sharks? Obviously, we would argue that they are very much the former. Most angels are successful people from business, now operating as semi-professional private investors. They all have deep backgrounds in commerce, entrepreneurship, owners of family enterprises, financial markets, professions, entrepreneurs, engineers, medical experts, people who've reached a certain financial stage of life and want to recycle some of that money into early stage companies. So there's a lot of experience to bring to bear into the market, and they can be very valuable to startup companies. But it's important to recognize that in private risk capital, we don't have to invest anything. This is not a fund management business where fund managers have to invest. Angels can sit on the hands should they wish. So incumbent upon entrepreneurs to convince angels to open their wallets. We're not just a bridge to VC. Every investment round should be seen as a means to grow real value in the company, not just to cover a working capital shortfall before that VC round. In a typical startup round, you might have 5 or 10 angels investing under the SIS scheme. For a large EIS round, maybe $500,000, $750,000, you might have 15 or 20 investors investing. And it could be a syndicate of syndicates. We often co-invest with 2 or 3 other groups in a deal. Some angels obviously have deep sector experience, but some are purely financial investors, which probably makes sense because a startup company doesn't want to have too many people with suggestions on what to do. But hopefully within a syndicate, there will always be 1 or 2 experts who come from that sector and can provide real value and contribute at board level or as mentors in that company. Beware investors bearing gifts. There are a few operators in the market who perhaps not as helpful to startups as they might pretend. Some structures have very high fees. Some of the early stage funds, like SES funds, do have very, very high fees, although they do have the benefit of providing a quick check, which obviously is very useful to entrepreneurs. But beware those fees. Some private networks claim hundreds of members. In my view, they're just a long list of emails. And those organizations tend to charge big fees to promote you to that list of investors. I would always argue stay away from those. There are a number of well-established, bona fide angel groups like us and many others around the country to talk to. So just watch out for some of those. As I said, it's quite normal to syndicate with other groups and also with early stage EIS funds. You can't pitch it, you can't sell it. Obviously, as angels, we want to see the founders. We don't want to deal with intermediaries who also charge big fees, by the way. So as a founder, founders are expected to come and showcase and present and pitch to investors. Somebody can't do that for you. And that's a critical factor because part of the evaluation is really the team. And talking to our members over the years, they always say, at the end of the day, it's a lot about the team. One shouldn't get seduced by the technology. The team is going to deliver the result, and we have to put our faith in them. It's all about the exits. To paraphrase Clinton, it's all about the exit, stupid. At the end of the day, we are trying to create a financial return. So we need to see a model which is going to produce financial returns, which has to be a capital exit in some form or other, M&A, trade sale, potentially AIM listing, but these days they are pretty far between, few and far between. Why do angels invest their risk capital? Yes, we are interested in creating impact, creating jobs, helping entrepreneurs. We are interested in certain sectors which contribute to the benefit of mankind. But at the end of the day, investment returns are critical. And as angels, like Philip was saying earlier, there is a high failure rate in startups. So as angels, we are looking to make a 5, 10, 15x return over 5 to 10 years. A few lessons learned from the 25 years of experience that our members have had. Invariably, forecasts are always over-optimistic, even the ones that say they are forecasting conservatively. I don't think in all the companies we've invested in, we've ever seen one actually has hit its financial and timescale targets. Perhaps AI will assist that process. We look forward to that. But we have to take a cynical view about forecasts. The key thing, as I said earlier, we invest in people. But as angel investors, we probably only invest 2 or 3 times in a company. Thereafter, either the company should be financially sustainable, or it should be requiring and taking on VC capital. We are pretty tough on investment terms, particularly valuation, because of the early stage in which we're investing and because of the high risks of failure in the market. We're looking for real USP, key value propositions, differentiation, and defensibility above all. However, deal selection is certainly not a science, it's very much an art. A few red flags. It's very important for entrepreneurs to research the investment market. Don't spam lists of investors. Invariably, they won't get much of a favorable response. Find out which groups invest in what and what stage. When you do get the chance to present your materials to an investor, don't just send a download link to a business plan. Send a PDF summary with a covering note and an email stating what you're doing, how much you're raising, and why, and what sort of terms you're proposing. We see hundreds and hundreds of deals a year, as do all investors. We don't have time to wade through 35 slide decks just to find out the deal's not even in scope or beyond the size in which we invest. So take a practical view, use common sense, and make it easy for the investor to make that first decision whether to meet and talk or not. Try and model your growth and your financial forecast in a practical and attractive way. Don't expect investors to sign an NDA, because we don't sign NDAs, never have done and never will. When you get into DD with particular investors, you may have to obviously offer an NDA to see, so they can see deep commercial or technical information. But when it's screening and investment selection, investors will not sign NDAs. In the follow-up, use responsive Q&A, be concise, listen to investors' thoughts and advice, set up a data room, and have a clear financial forecast and a clear IP strategy if you have IP in the business. Post-investment, a key thing is to keep everybody informed. Don't go dark on investors and then suddenly email them, say, we're running out of money, let's have another round. Share the bad news as well as the good news. Keep everybody informed, at least quarterly, if not monthly. And treat your investors like partners in the business, not just external shareholders. If the money is offered, take it. Invariably, you'll need more than you expect. So overfunding is probably a very useful thing to do. So hope those thoughts are useful. I've got a few summary thoughts which I can share in the Q&A. But Philip, I think I'm over my time. So back to you.
Thanks, Struan. If you could stop presenting, that would be brilliant. Always good to get the investor's perspective. What I am going to need to do, and I'm going to ask everyone if you can go at pace so that we can get some questions. I am, in the meantime, if you're sending questions through chat, I am working through them and responding as we go along. If you want to ask a question, raise your hand, obviously virtually. I'm constantly checking any hands raised, and I will then make sure that they get answered. So next up is Toby with Reserve, and one of our brilliant artists from LettsArt, who asked the question, I've got some Bitcoin, so when's the crypto stuff happening? Well, here's one for you, and it might even be handy. Toby, show us your pace. Like all the files you've got. That's why you need them all in the VentureFactory venture assets.
Yeah, no, fantastic. And the VentureFactory has been a great support, and Philip's always also a great individual resource. So great presentation by Struan. I'm Toby of Reserve. We're the Bitcoin lending company, and we're extremely excited to be presenting here today what we're doing. So we're effectively, our mission is to become the most trusted Bitcoin-backed lender globally, giving Bitcoin holders access to fair, transparent capital, basically meaning they don't need to sell their Bitcoin and they can hold on to it for the long term. So the problem is it's actually very hard for people who sort of hold Bitcoin to get liquidity on it if they believe it's going up in the future. And there's roughly 50 million of these people, but the way that they can get access to being able to spend it without triggering tax events or losing their upside is thorny. So the rates for borrowing can be as high as 18% and very often above 10%. There's also perhaps worse. There's been, or definitely worse, is they've more than 50 billion has been lost of people trying to borrow against their Bitcoin through in sites that have rehypothecated, and very famous failures of Celsius, BlockFi, Genesis, and others saw the collateral of people gambled away while they thought they were making a smart loan. The industry is US centric, so about 90% of Bitcoin lending takes place in the US. And there's a supply gap. We think, especially in the $1 to $30 million area, which perhaps is surprising to people. You would think that the red carpet gets rolled out if you have 1 to 30 million, but actually, really, like in this world, you really only get white glove treatment above 30 million. And then there's SaaS platforms that do serve smaller lenders, but what we're doing is effectively at reserve, looking to provide the lowest rate, most transparent Bitcoin-backed loan in the market, looking at doing 9% and lower effective rate, and allowing lenders to get a 6% yield against their Bitcoin. So and basically we get to book an origination fee of 1.5% and a spread of 1.5%, which we think is super attractive while getting very low rates, which we anticipate to come down, and good yields for lenders. So this makes us the lowest effective borrower in the market by cost. We're one of a few platforms that does not rehypothecate, and we're looking at the UK FCA regulatory footing to make us one of the best-in-class groups in this market. So our loans come at a 50% loan to value, and at attractive rates, and perhaps some of you paying a mortgage, there's no monthly payments required, so we make it very attractive, and you can repay at any time with no penalties. So the whole thing here is to incentivize people to make loans and be able to close out their positions as well. And then for lenders, it's a really attractive way to get a yield in a market struggling for yield. You can get a 6% annual yield, which is 200% over collateralized, so extremely low risk. And we're making sure we're working with regulated custodians to make sure there's no rehypothecation risk. So this is simple, transparent economics with all fees disclosed up front, which we think is fitting of the blockchain, but sadly not so common. We're also playing in a 75 billion global dollar market with no regulated UK player. This is structural as a gap, and we're positioned to own it. It's a great sort of there's actually 8% of UK adults hold crypto, so it's decent penetration and some very meaningful people to go after. 70% of those are Bitcoin holders. I'd question whether the other 30% are being very sensible, but that's just my perspective. Then we think this market can be $100 billion plus worldwide, and is very much on the trajectory to grow. But there's 0 FCA regulated lenders, and we aim to be the first one over the line on this. We're working with Kraken, a regulated custody partner, who can help us do $1 to $10 million loans and backstop us, that we feel that we can fill any loan available. And then we're working with Cartwright, who work very much with the UK pensions industry as well as now the Bitcoin industry. One of the largest competitors, pure play in the world, is Ledden. They've got an $836 million loan book. We'd love to surpass them in the UK and Europe over time with that regulated footing. And then there's obviously big drivers of adoption. So you like BlackRock's fastest selling product has been their Bitcoin ETF, and you've obviously seen major treasury adoption over the years as well. So we think we've got an extremely attractive business model off our 3% margin on every loan. And we also get to capture some asymmetric Bitcoin upside. So while being a very agentic first capital light team, so obviously what Philip's doing in the LettsGroup is super attractive to us in how they're so AI native, and we love kind of thinking about how the LettsGroup helps us see things. And in stress testing things like our business model. So we've got we're hoping for a $24 million loan book year one. We're getting more and more confident that we can surpass this loan book, and then we think the business compounds very nicely from there. And our expectation is to get to the key $1 million revenue run rate, and while there's some major upfront costs in this journey due to regulation, hence the need to raise investment, we're effectively going to be pretty profitable quite quickly. So our product allows you to lend against all types of different fiat, pound or dollar. Like we think this is a very responsive dashboard that really allows you to, as large sums of money are being lent against, we want to make it really, really good for you to peer into exactly what's happening and responsive and being able to get the comfort to borrow significant sums of money, like 700K on a platform that we envisage having a sort of Revolut style interface, and you can effectively feel comfortable putting amounts like 50 Bitcoin, which is 3 million in custody, to get your loans and make it very flexible in terms of the LTV and our goal is to make it really simple to understand how you're borrowing, and to be able to simulate what might happen even in a scenario where Bitcoin crashes massively, and what you need to do, but obviously aiming to really just help lenders and borrowers see their loans out to term, and hopefully compound their fiat and Bitcoin. We've been delighted to be working with the LettsGroup, and thank you very much for listening.
Great, thanks for that, Toby. That was really good. I'm going to keep us moving. I've noticed that lots of you are messaging, some me directly, some the group, mostly me directly. So to answer, the questions seem to be coming through that. So to answer publicly some of the questions that I think generally people would find useful, we've got a really interesting mix here today. We've got some investors. Cambridge Capital Group is actually one of our investor partners of the VentureFactory, as we try and increasingly, we're building more and more tech around the VentureFactory. You'll see that particularly from 2.0 starting next month, to connect the investors with the capital more efficiently with the platform. And we've got lots of clever ideas to do that. And as a result, we're starting to build investor partners around that. And Cambridge Capital Group is one of them, a bunch of others as well. So that's a kind of really interesting development for the VentureFactory. We've got a bunch here of creative entrepreneurs. And the bit I want to remind all creative entrepreneurs, given that there is a creative side to my life as well, is you are all entrepreneurs like anyone else. you just happen to have picked one of the most interesting and one of the most challenging industries to go after, which is the art world. But you are no less entrepreneur than anyone else. And if you look at any definition of entrepreneur, in fact, if you look at any definition of the creative industries, it includes things like software, which is where a lot of the conversation is with entrepreneurship, but it is just as relevant to you. If you do want to, not only are you building your own business by building a LettsArt gallery that we're going to take a look at in a minute with John, but if you want to also develop your business, or your LettsArt gallery or other things in the VentureFactory, then please do. You can just sign up for free at www.letts.group. Also, I've had a bunch of other people saying, how can I see more demos on the VentureFactory? How can I find out more about it? How can I, where do I go to sign up? It's really simple. Just go to www.letts.group and you can sign up there. There's a free plan and there are demo videos there. We're going to add another demo video later on today, which is the bit you saw in the clip. So don't worry about that. John is our next speaker, and he is our commercial leader for LettsArt. It's also his birthday today, so happy birthday, John. And we're all excited to see LettsArt has really transformed its growth. And a chunk thanks to John, who's a very experienced growth leader in the UK digital and tech industry. So over to you, John. Happy birthday.
Thank you very much, Philip. Hello, everyone. Good afternoon. So yes, I'm going to talk to you about LettsArt. We are a AI native software platform that's fundamentally designed for artists to help build a business. We provide all the tools that are needed to manage, distribute, and sell art. So very much in this entrepreneurial space. A quick sort of high-level summary of where we are. Going for a few years, we have around 6,000 collectors now accessing around 1,700 galleries. And by galleries, if you're not into the sector, we actually mean the digital galleries that artists, gallerists, and other studios and institutions are building. So we use the term galleries for allowing an individual to build their own gallery, and it's growing. We're adding dozens every week. So it's in a nice growth trajectory. We actually use AI kind of as the admin efficiency play. So we have AI embedded into LettsArt to really sort of take some of the drudgery out of the administration of managing and selling art, cataloging art, and so on. So we're not using AI right now to create art, but it's more about helping artists and gallerists manage their business. And it's very much designed by artists for artists. So it's the ability to build an online gallery with no coding skills, no technical skills, very simple to do. And you'll get an idea of that when I do a quick demo later on. The problem fundamentally we're trying to solve is that, as Philip said, artists are entrepreneurs, but the reality is it's very challenging to make a living from art. There are many different ways to that. Access is difficult, and the industry is really governed by gatekeepers and algorithms. Historically, the gatekeepers were the physical galleries, who would really be filtering artists between them and the collectors. Today, it's really algorithms, how your art shows up, even on dedicated marketplaces, art marketplaces. You're really at the whim of a third party. So it's really challenging to both break through and also directly connect with collectors. So commercially as well, if you go through some of these platforms and these galleries, these third parties, you're paying anywhere up to 50% commission on any sales that you make. You're really paying for that sort of access to the market. And I think as a byproduct of that, also, it's difficult to build a relationship with your collectors, with your followers, I guess, as we would say in the digital world. And that is somewhat at arm's length. And then finally, of course, in this world, the other challenge of AI on the other side is copying of art, especially in the digital domain, losing your IP and not having control of that. And so that's the broad problem that we're trying to address from the business perspective of art. And really, LettsArt is giving artists some of the tools to disrupt that current situation. It lets artists and gallerists sell direct to collectors. It's another DTC play by their own branded gallery. As I said, no coding needed, no technical skills needed. You sell direct to collectors. You cut out the middleman, so you're not paying those high commissions. And we have multi-currency. We can take crypto payments. That's where we kind of dip into crypto. We also have the ability to build non-fungible tokens out of artwork and do NFT to cash as well. If you NFT your artwork, so if you digitally tokenize them, then the great thing is that you can also maintain provenance and governance over that artwork. Another issue that I mentioned that's really important. So you can trace that artwork. It can be traced back to the artist. And also, interestingly, the resale market then is opened up to the artists, because typically when you sell a piece of art and then the collector sells it to someone else, the artist doesn't take a share of that. If we NFT it and through the LettsArt system, you actually can get a share of that onward sale, which is a really interesting opportunity for artists. As I mentioned, our play on AI is art intelligence. We build in AI in a way that understands art and what artists need, and we let them build these wonderful galleries. From our commercial perspective, if you're wondering, we monetize through subscriptions and through low sales commissions. So we're typically talking in the region of 10 to 14% of any sales that are made through the platform. And I know, I think Carl's on here today. And so we have wonderful artists like Soft Wasp who produce just wonderful artwork on the platform. And here's some examples. I thought no presentation is complete without some wonderful art in this world. It's a very visual medium. The market opportunity, well, like a lot of opportunities, it's huge, of course, we might say that. The global art market is huge, but specifically the digital market is around about $140 billion. No surprise, it's growing pretty fast. It obviously took off during COVID, plateaued a bit, but it's taken off again. And then if you think about the ecosystem that we have to address in that market, it's around about 400,000 galleries and museums across the world, 1.4 million working artists, even more photographers, and around 40 million art collectors. So that's the sort of market that we're trying to address with LettsArt. And as you can see from my top of the presentation numbers, we've only really just scratched the surface, which makes it incredibly exciting. So really our sort of 3-year vision is effectively for this LettsArt to become almost the business operating system for the independent art world. We bring together artists, gallerists, collectors, galleries, museums, all into one place. And you'll see some exciting functionality coming over this year that increasingly connects those stakeholders in this world. But really our goal the next few years is to get to 100,000 collectors, around 30,000 active artists, gallerists, and museums. And that will translate into around about 22 million in ARR coming from those subscriptions and transaction fees. So that's really, a whistle-stop tour of LettsArt. I will do a quick demo for you to share, just to give you a view of how it works. So here we go. So here what I'm going to show is, this is the LettsArt dashboard. This is what an artist sees to start to get things up and running. So let's press play. And it has everything that's needed to manage, distribute, and sell art. Everything is down the left-hand side here in this column. If I go up to the right-hand side, I'm going to add some art. It's a photo, but it could be a digital image of a sculpture, a physical piece of art, or an installation. So we're adding it to a gallery. And then I'm using AI to quickly generate descriptions and tags. The sort of admin thing, there's a bit of a bore when you just want to create art and share art, but it gives you a starter for 10, which you could then update or change. It gives title. It looks at the artwork and gives it a description, gives some tags for curating and cataloging. And I want to price this up and sell it on the platform. I'm going to create a limited edition of 10 of these photos. There are 10 available because I haven't sold any yet. And I'm going to price them up optimistically, maybe £150 a go, given this is one of my snaps. You can also put in information about the artwork. I'm going to now flip over and be a collector. So I'm going to go and look at the gallery. This is my gallery where I load up some of my photos. You can see the gallery is actually updating as I'm looking at it live as a collector. And down in the left-hand side, you can see that piece of art has been added to this gallery. I, as a collector, then can buy it. You can see in the top right-hand corner, it's been added to my cart. I go into my cart. This is the order. Because we connect to Stripe, I can buy it directly. The artist is connected to Stripe. I can take payment directly to the bank account, and I can fill in my information and make the order. So super easy to add art to my gallery, to tag it up and name it. And make it available, and then for a collector to come in, see it, buy it, and then start the process of having that shipped. So that's really LettsArt in under 10 minutes.
Thanks a lot, John. And for those of you that are creative entrepreneurs and artists, and there are a few of you here, I hope and want you to feel comfortable that the team at LettsArt, and led by John on the commercial side, have the experience and capability to really grow this thing. So when I look at the targets that John set 3 years out from now, a lot of those are LettsArt's current trajectory just continued, and it's really exciting to be at this stage with LettsArt. It is one of the core apps that we have both backed and helped build, and has been a very early VentureFactory user. And we believe very passionately in it. So, but trust the system. If any of you here are interested in buying art, then it's really simple. Go to LettsArt.com, and you can either go to galleries direct. You'll see, go to LettsArt.com, you'll find them. But there's also, we just launched the LettsArt Market, which is a real use case for LettsCore. LettsArt's content is managed by LettsCore, which is this tokenization content platform, but it's also a developer platform. And one of the lead developers at LettsArt turned it into a full art marketplace within 3 weeks using LettsCore, building on LettsCore. And it's got similar functional capabilities to Saatchi Art, which is unbelievable. And so that's really the power of LettsCore that you're going to find out more about in a second. I'll keep answering, most of you are messaging, I'll keep answering messages as we go along. And now we're going to bounce over to Oliver from Rix, which is that given themselves the small challenge of trying to do what Lloyd's of London seems to have not really done very well, which is to build a full end-to-end modern insurance and reinsurance trading system. Oliver, over to you.
Thanks very much, Philip. Can everyone see the presentation?
Yep.
Hello. Fabulous. Thank you very much, guys. Hi, my name's Oliver. I am the founder of the Reinsurance Exchange. We are building the world's first reinsurance trading platform to bring risk even into the same world as stocks, bonds, commodities, and currencies. Because risk is the last major asset class that is currently not traded through an exchange. Now, I've been on the front end of insurance operations, trading, and strategy for the better part of a decade. So I've had a first row seat to what works and what doesn't. And the level of waste that's currently seen across the global industry is fairly huge. So to start off with, what is RIX? Well, if you picture the stock exchange, where brokers, traders buy and sell shares, the administration side of it lives behind a single screen, which is the trader dashboard. And this is what we are trying to bring forward for trading insurance. We provide traders with everything that they need to actually carry out their jobs. So trading is, quite simply put, it is listing, it is quoting, it is negotiating, and it is binding. We are taking away all of the admin that currently characterizes the current state of trading. So that is document production, that is audit trails, that is logging activity at every step along the way. We automate, we gather data, and we carry out marketing on behalf of traders at the ground level, so all they get is a seamless trading experience. So for non-insurance natives, let's just quickly go through what we're talking about. So where the industry itself generates about 6 trillion a year globally through the trade of risk transfer options, which simply put gives you, the buyer, the ability to transfer the cost of something going wrong to an insurer. But unlike an equity option, which is worthless at expiry, risk transfer options carry value forward every time they're renewed. So what we effectively have here are long-term cash flows that are securitized. And as I said, the trade flow is reasonably simple. At submission, the broker brings the risk to market. Quotation, the underwriter reviews the submission and offers terms. Placement, the broker accepts terms, the contract goes live, and then claims handling, which is the part which is the actual service that you buy when you buy insurance. And on the back end provides us with the feedback loop that tells the insurer how the option they've just sold is performing. So 4 steps, reasonably simple, right? Unfortunately, not particularly simple at all. Now, this is an abridged version of how those 4 steps are currently carried out. Now, and you may be asking yourself how such a valuable industry, it's around 6 trillion globally, leaves so much room for waste and for error. And the answer, quite simply put, is fragmentation. Because without a single system to orchestrate trading and data, you leave a huge scope for waste. So in this system, for example, this trade flow is happening in excess of 20 times for every risk within the London market itself. And that's adding up to around 35% of expenses that are incurred against revenue in Lloyd's alone. That's around the 57 billion mark. And that is that's constituted by multiple systems that don't talk to each other and an army of operations staff whose literal jobs are to enter data repeatedly between these systems. And that's to say nothing of the traders who have to sit on top of this, who have to not just administrate this system, but enter their activity data at every step along the way. So what we effectively have here is a fragmented system where data errors and human error are literally baked into it, which compromises data, which compromises business planning. And the system itself is actually quite dangerous because on top of the fragmentation, the actual authority controls for trades are handled by individual firms rather than linked directly into any trading system. So more often than not, risks that shouldn't be bound slip through, or risks that shouldn't be brought onto insurers' books slip through, which means that claims that shouldn't be paid get paid and the market loses money. So it's a little bit of a mess at the moment, but RIX is offering something a bit cleaner. Now, I started RIX because I thought there was a better way to trade. And the eagle-eyed among you may notice that the only decisions left on the board are trade decisions. And that is the offer that we're making to the industry. We are reducing the number of actions required to trade a risk by more than 70%. But rather than just show you, let me actually demonstrate the platform itself. So this is the broker dashboard, a central hub for live trade information, dynamic KPIs, and everything that the broker needs to touch in order to trade a risk. So going through the new business flow, the broker can start a new submission in the risk submissions dashboard. Here, the broker will enter the risk details. They will select the coverage and policy documentation, upload related risk documentation, so the claims history, financial statements, whatever might be related, carry out compliance checks, and then send out to market. Because with RICs, clients will only ever have to be onboarded once. Risk profiles will only ever have to be assembled once. We are killing off double keying. And at market, RICs gives the broker the ability to market in whatever way they want it to. So, for example, they can submit to their trusted underwriter partners, or they can take risks directly to market for public appetite matching. They can even market directly to their lead underwriters or to all the underwriters they select at once. And underwriters don't have to be on platform for brokers to access them. Once marketed, the risk lands in the underwriter side of the platform, where underwriters can respond to the broker submission and provide a quotation. They can ask questions or just decline the risk. But for the sake of this demonstration, we'll quote. And then back on the broker side of the platform, the broker has access to all of the risks that they have received terms back on. Going back into the one we were looking at, the broker has the ability to counter or accept the accept the terms that have been provided. And for the sake of this demonstration, we'll fully allocate the order to the underwriter's terms. Then we have the contract builder. Now, this is currently at MVP. This acts as a final check, but once users are comfortable with the platform, this will all be automated. The first thing the contract builder does is run a pre-bind checklist to allow to ensure contract certainty for one, and also to allow brokers to intelligently correct the contract where required. Once this is done, the platform itself automates contract assembly, which is currently more than a quarter of brokers' time in work. And the platform itself provides a full digital readout of each contract at the most granular level, solving what is currently a huge cost for data capture. And then finally, all participants to an agreed risk then have access to a full digital audit trail for both trade data and activity data, giving a single source of truth to the market instead of the fragmented data we have today. In terms of the market opportunity, the London market still remains the core of insurance trading globally for now, and we think that RICs can help boost that. In terms of how we generate revenue, we do it in two ways. Firstly, by reducing cost, and secondly, by increasing capacity. We're reducing cost across the domains of multiple systems and the operation staff that are required to run them. We're targeting a cost base of around 4 to 9% of essentially users' operating margins, and we will be charging against that reduction a 25 basis points, so 0.25% charge for every transaction that goes through. Increasing capacity, RICs will open the market at both ends. Because we are scaling the cost of transacting directly to the cost of, we're scaling directly the cost of doing business with the cost of transacting itself. We open up the market to smaller players that can't afford the fixed costs of multiple systems and an army of operations staff, while also making a universe of smaller, lower volatility risks open to service by global majors who can't currently service them because they don't cover the cost of the current operating regime. The idea being that everyone ultimately wins with RICs through the cost gap that we are exploiting to charge. We estimate that on average, about every trade that goes through RICs, for every £10 that goes through RICs, we can return a significant saving to either user operator margins or to be returned to customers. What is the aim of this? Well, the aim is the market itself. In 5 years' time, we are targeting 400 organizations to be brought onto the platform, and the plan to do it starts off with recruiting brokers. The idea is to win one side of the market, so the brokers acting as distribution nodes of risk on the exchange, and they then pull on the carriers, so the insurers and the reinsurer side, by being able to access all of their carriers on one platform, and then providing those carriers with analytics and dashboard capabilities that would currently be very expensive to develop internally. Now, we're also engaged with market utilities like Limos and Accord, and are applying to the Lloyd's Lab, which are organizations and institutions that turn interesting ideas into credible revenue streams. Now, in terms of the adoption path, the key numbers here are the PPL adoption, which is the dotted line you can see here. Now, PPL was the market's original placing platform, and it got to 339 on-board users at year 5 through a literal adoption mandate that was driven through Lloyd's. Now, RICS intends to get there without one, because RICS isn't going to be a workflow tool that is mandated for use by a central authority. That effectively is for signing documents between parties. RICS from day one at MVP has the capability to act as the marketplace itself. Thank you very much for listening. We here at RICS very much believe that the future of risk trading has to change, and we wish to lead the charge, and we'd love for anyone to lead it with us. I'd be happy to take any questions.
Thanks for that, Oliver. So there are 2 quick questions. One's from me, which I'll do afterwards, and one's from David Penfold, who is a wonderful new joiner to the VentureFactory with a very, very cool skunk startup. So David, I can see your question. Do you want to ask it yourself, or do you want me to read it out for you? Okay, he prefers chat. So the question is, could this be done as a centralized risk clearinghouse where the different actors could use their own software and connect via, for example, REST APIs for the data flows? You maintain the process and centralized IP, but allow them to have their own processes, etc. What's your view on that? Quite technical, but what's your views?
So there have been several attempts to modernize the market through that mean, essentially. So what Accord actually does is a similar kind of thing where they act as a sort of a centralized data exchange. But the trouble is, insurance contracts don't work in the same way as stocks or bonds or commodities, in the sense of these are contracts of ownership. They work in a very specific way legally. Where insurance is very different, and why it doesn't quite work on the pure data exchange layer, is because you are, especially at the specialty and commercial level, which is the lion's share of what we're targeting, you're dealing with contracts that are essentially that have bespoke terms that will interact with the legal systems in which they operate in very specific ways. So what RICS is doing is giving traders essentially like a straight through ability to not just deal with the operative terms of contracts. So what I think you may have been describing there in terms of like just the sheer numbers of it, but also the live ability to deal with the legal side of what those wordings represent. And it's done in such a way that actually once it's agreed by the humans, that then gets passed straight through at a machine readable data layer.
So next question, and Peter and Adam, don't worry, I'm going to eat into the wrap-up time at the end, so you'll still get your time. But if you can answer this one quickly, you are one of our early beta users over at RICS, and have been building RICS on the VentureFactory platform now for probably 9 months odd. And you've really transformed the business, which is fantastic to see. It's been a pleasure working alongside you and watching you. You really are one of the power users of VentureFactory. So just tell us a little bit about how building with the VentureFactory has made the delta for you guys.
Sure. So actually, it speaks really nicely to one of the early slides that was brought. Sorry, I'll be very quick. whereby the old method of doing it was going through advisors, going through fundraisers, going through tech incubators. And what that essentially exposed me to was like the incentives of the people that I was working with. So I was essentially told, okay, look, you've got your technical discovery document, you've got a pitch deck, let's put you in front of someone. Whereas the VentureFactory took me through every step along the way to the point where actually starting from what was effectively a good technical idea, I now have the research and the mechanics to build a data room, essentially on top of go-to-market strategies. And the startup intelligence piece that you guys have recently brought on, it goes beyond just the sort of the step-by-step venture build that it is almost like the foundations of how a company gets built, and it's gotten me thinking about things like IP protection and so yeah, I can't think of all of it off the top of my head right now, but it gives you a massive advantage that would cost you if you were to use basically if you were to use a consultancy a lot more money than what is being charged at the moment.
That's great. You guys can, by the way, you can start using co-founders after this. Tonight we're making it, everyone can start using it. We just ran it, interestingly. We've been running it ourselves for LettsGroup, as we should, for the last 5 weeks. And our co-founders have done extraordinary things. A bunch of them are exactly what you've been talking about. So going off doing legal stuff for us, starting to think about filing patents and all that. It's been really interesting watching. So you guys can get going with it because it's ready to go. Okay, with that, we now hand over to, thanks a lot, Oliver. We now hand over to Peter, who is the commercial leader of LettsCore. LettsCore, key infrastructure layer for a bunch of organizations and a bunch of LettsGroup core apps, now available as an infrastructure layer to anyone using VentureFactory. You just go to the 9-dot grid in the top right of the header. Click the 9-dot grid icon and you'll see drop down all of the available core apps. And then you can just fire them up from there. And we've even now got LettsGroup single sign-on across all of the core apps. So you can start using them from tomorrow. Peter, over to you. One of our key core apps and infrastructure plays.
All right, well, good evening, folks. So I'm here to introduce LettsCore. So I guess at its simplest, LettsCore is AI native infrastructure. It's designed to help organizations manage, structure, protect and monetize digital assets, but way beyond a content management system, because how we organize content, trust it, govern it, and derive value from it is absolutely essential, especially in a world where content can be generated at an almost unlimited scale by AI. And that's really the problem that LettsCore is designed to solve. So we basically see 4 recurring issues. Firstly, fragmented systems, content spread across drives, cloud storage, email systems, and collaboration platforms. There's no single source of truth. Second, it's difficult to retrieve stuff. Teams know they've got valuable information, but they can't find it when they need it. Third, provenance and attribution are broken. So as content moves through workflows, ownership and history become confused and everything becomes difficult to verify. And lastly, revenue leakage. Assets are reused, shared and distributed without visibility, attribution, or indeed commercial control. And so that's why we built LettsCore. It really combines 2 layers. At the top, you've got an AI layer, which helps organizations search and retrieve content more effectively, automatically tags assets, improves metadata, manages different versions, and helps users locate information more quickly. But below that, importantly, is an ownership layer, which creates a permanent record of ownership, provenance, and rights associated with all the assets. You don't need to become a blockchain expert to use it, because the ownership layer pretty much operates largely in the background. But the overall result is an infrastructure that combines AI efficiency, and verifiable ownership and governance. So one of the reasons we're obviously excited about LettsCore is we've already moved it beyond being a technology concept. Today, we're supporting more than 60 organisations, over 1,700 registered users across multiple applications and use cases. They're early numbers, but they do demonstrate that LettsCore is already operating in real-world environments rather than remaining a technology concept.
I love the Peter saying they're modest numbers. You only launched commercially at the end of last year, for God's sake. For most companies, that would be ridiculous numbers to do in just a few months. But keep going. Sorry.
Thanks, boss. What makes this particularly powerful is that the ventures are very different businesses, yet they're all sharing this same underlying foundation of LettsCore. So we have LettsCore SaaS, which is a demonstration of how AI native media infrastructure can help individual and small agencies organize, retrieve, and govern their content at scale. We've got LettsArt, which John's spoken about a lot, which applies exactly the same foundation to the art market to help artists establish their provenance, manage ownership, and create new monetization opportunities for their art. And most recently, LettsCap, which applies exactly the same principles of infrastructure to investor management, which brings together cap table administration, tokenized ownership, and secure document management within the single platform. And importantly, for all the audience here, every VentureFactory business is automatically inheriting the capabilities because LettsCore sits underneath the VentureFactory platform as the highly secure core infrastructure layer for that. So whether the asset's content, intellectual property, investor documentation, shareholder records, or venture knowledge, the same principles of organization, retrieval, ownership, and governance apply. So LettsCore is not a single application, it's actually a reusable infrastructure to support multiple ventures. So at this point, I'd like to really show you a bit more about LettsCore by demonstrating LettsCap. And while you'll see that the application focuses on cap tables, shareholding, and investment activity, the real story is the infrastructure behind it. So, LettsCap is a table management system for startups and scale-up businesses. So here we're looking at a company view. This is the cap table overview, what a company treasurer or secretary can see overall. They can see shares issued, number of shares, number of shareholders, market cap, even whether they've got any KYC approvals waiting. Now, we're built on the concept of share classes, so you can set up each investment to have its unique blockchain mint address in terms of share class. You can see the stakeholders in your business. You can organize additional fundraising. I can see a cap table summary of everything that's happening on my business. I can also see all of the documents associated with my company, manage dividends, and even send announcements to my investors. But it's not just for the company. Here we see the investor view. All investors can see all of their investments across LettsGroup. So importantly, what I wanted to say here was, how can LettsCore work for you? So I think this is where the conversation becomes particularly interesting, because most organizations really don't just need another content repository. They've got enough of those. But what they do increasingly need is infrastructure that helps them manage the knowledge, the ownership, and trust more effectively. Now, for some organizations, media organizations, for example, that might mean content and knowledge management. But for others, it means secure document storage, it means governance, it means compliance. And for yet others, it means managing intellectual property, rights, and monetization opportunities. Increasingly, it means building entirely new digital products and services that require the trusted data, the auditable ownership records, and AI-enabled discovery, all of the things that LettsCore has. So the underlying challenge is often the same for all of those groups. How do you organize, retrieve, govern, and protect your valuable digital assets at scale? And in an AI era where tokenized content will become increasingly pervasive, it'll make trusted infrastructure absolutely essential. And LettsCore is there to provide that foundation. Thank you.
Thanks a lot, Peter. For all VentureFactory users here, and there's quite a few of you, bear in mind that Let's Cap is now available in your VentureFactory dashboard. Just go to where the core apps are, as I said, the 9-dot icon grid, top right of in the header, top right of your dashboard. Let's Cap, which is brand new, which is really all about tokenized equity and investor management. So it is a cap table management system with tokenized equity, which is kind of cool. That will go live in the VentureFactory again as a core app tomorrow. By the end of tomorrow, it will be live in there as well. So you can dig in. Okay, so last, by no means least, we got approached by an outfit called Friends of Batter that is a big international network to develop and support and probably unearth really cool young entrepreneurs doing really cool young, modern, fresh things. And they hold regularly pitching competitions for some of their hotter young entrepreneurs. And we were asked if we would give the support of our VentureFactory at a very low cost to one of their winners about 2.5, 3 months ago as an experiment to see if it worked for us. And if it worked for us, then Friends of Batter want to scale up our offer and offer the VentureFactory to a lot more of the, I think, thousands of young entrepreneurs that they support that are typically in college or university still building their concept. So the winner and now VentureFactory user Adam is our last presentation. By no means least, he's bold, he's fast, he's lively, he's from Toronto, and he is building something that we all kind of need, which is an AI native way of making email marketing, which as we all know is a bloody nightmare, work better, work faster, and be an all-in-one solution so we don't have to use 6 different apps. We can use Bavlio with that. Over to you, Adam.
Amazing. Thanks for that intro, Philip. So, hey everyone, I'm Adam. I'm the founder of Bavlio, and we've just gone live 2 weeks back. About 9 months ago, I was at Next Canada, which is an accelerator in Toronto, working on a different startup. We had just pivoted, so we were back to doing cold outreach. And this wasn't new to me. I'd done cold outreach across multiple ventures before, so I've lived the grind firsthand. I'd spend an hour writing a single email that actually sounded like me and barely got through a handful a day. So I was venting about this to one of the program managers at Next Canada called Fletcher, who advises hundreds of founders. And he said something that stuck with me since. He said, Adam, there's always been a trade-off between personalization and volume. You can either send 1,000 people the same email, or you can write a couple personalized ones, but you only get one or the other and not both. So I remember there sitting there and thinking, with where AI is today, that shouldn't be the case anymore. And I asked him, if I built something that was able to personalize at scale, would you use it? And he said, that's literally 50% of my job. I'll be your first paying customer. And that's exactly what ended up happening. And here's the thing, it wasn't just him. Fletcher told me the hundreds of founders he advises were all stuck the same way, losing close to half their time doing outreach. So I knew this wasn't just a me problem and that it was widespread. So the first version of Bavlio did exactly as I described. It was a real personalized email for every lead at scale. But the more I watched him use it, the more I saw that personalization was only the start of their problem. The other half was everything that had to be bolted together in order to send. So here's what real outbound will look like today, especially if you're a founder or a small team with the one person running growth. Let's take Fletcher, for example. His whole setup was a Google Sheet to track everyone with mail merge bolted on top and him manually digging up email addresses and spraying them out, hoping most of them were even valid. He wanted to do LinkedIn as well, but he could never do it at scale. So he'd handpick maybe the 100 people he thought were the best fit and message them one by one. Incredibly tedious. And watching this is what pushed us to build LinkedIn campaigns right into Bavlio and not just stay with email. Now, Fletcher was scrappy. A more built out team just buys all the tools instead. Apollo for the lead data, something like Hunter to find and verify the emails, instantly to warm up the inboxes and send, Clay or manual research for personalization, and a separate tool like HeyReach for LinkedIn. So now you're carrying maybe 5 or 6 subscriptions, all built separately, and none of them talking to each other. And you lose 2 or 3 hours for every campaign just stitching them together before you've sent a single message. And it's what they like to call death by 1,000 tabs. Bavlio is all of that in a single place. You get one login with one agent, email and LinkedIn both built in, even on the lowest tier. And it starts at just $49 a month, which is less than almost any of those other tools costs on its own. So there are 3 things that Bavlio does for that founder or small team that nobody else does. The first, and is a real edge, is what we like to call uncommon commonalities. When you write a personalized email by hand, you're pulling on everything in your own head, your business, your customers, the deals you've already closed. And you'll notice that a prospect is in the same city as you, let's say, or that they used to work somewhere you've sold to before. And mentioning that is what really gets a reply. And Bavlio captures all of that once during your onboarding, and then it researches every lead the same way you would by looking at their website, looking at their LinkedIn, looking at their socials, and writes each email from it. Every email connects to something they actually have, and no other platform does that. And the best part is the agent keeps learning. It refines the copy over time and A/B tests to get you as many replies as possible, the kind of tuning that manually takes people hours to do by hand. And because every email is genuinely unique, it's not a template with just a name dropped in. They don't trip the spam filters the same way templated blasts would. And as a result, our deliverability is higher. It also, of course, helps that we run all of it on BavEmail, which is the email infrastructure that we've built from scratch ourselves. So we control deliverability end to end, and it helps keeps costs down. The second thing is that Bavlio is agentic from the ground up. So we have a public API and an MCP server. So if you already live in Claude or Cursor or Codex or whatever agentic setup that you have, you can simply plug Bavlio in as a skill and have it run your outbound for you. And the third is the product itself is the agent. You don't click through any of the menus. You just have to talk to our agent, Bavi. You can say something like, find me 20 CTOs at Toronto FinTechs, write the outreach, launch it, and Bavi walks you through the whole thing step by step, from finding the people to writing the emails to handling the replies. Let me show you all this in a quick demo. Welcome to Bavlio, the one-stop shop for scaling outreach. Upon onboarding, you're greeted with Bavi, your personal AI agent. Bavi not only collects all the information that is publicly available for your product, but also what lives in your head to truly personalize at scale. This is saved as your sender profile. From that same chat, you connect how you send, your domains, your inboxes, your LinkedIn account, as simple as having a conversation. The next step is to ask Bavi to find leads. Bavi suggests the ideal customers based on your profile, and then automatically finds and enriches their contacts into a lead list. Building a campaign is just as easy. Bavi walks you through the entire flow, and your multi-channel campaign is live. Within a couple of days, Bavi does its magic. Ask Bavi how your campaigns are performing, and it surfaces all the numbers to you. As replies come in, Bavi flags the ones worth your time. All that's left is to book the call. So what are you waiting for? Go to bavlio.com to start scaling your business today. Okay, so let me put this in context with the market. The category that we're in is called sales engagement, and it's about a $9 billion market this year. What's interesting is that Gartner actually renamed the category back in December. They now call it revenue action orchestration, which is really just the AI native version of what sales engagement used to be. So the whole category is being rebuilt around exactly what we are doing. And the money is following it. Clay raised at a $3 billion valuation last August, and they were marked at $5 billion in a tender offer in January. Apollo just crossed 150 million in ARR. And here's the part that I'd like to point to. Both of them sit one layer below us. Clay gives you data enrichment, Apollo gives you the database, but we sit on top and actually do the outreach end to end. So it's a huge, fast moving market, and we're sitting at the layer that the value is moving towards. So before I tell you where we're going, here's where we're at today. We just launched 2 weeks ago, as I said before, and with 5 months of pilots we've already done previously. Since launch, we've partnered with 2 accelerators to make Bavlio their default outreach tool for their startups, one of them actually being Next Canada, which is where this whole thing started with Fletcher. And just over the last week, I had 3 meetings with founders and onboarded all 3 of them. So it's been a real full circle moment for me. Now, what does winning look like from here? For our first year measured from launch, I want us around $20,000 in MRR, or roughly 300 paying customers. And we make money on every customer that we serve. And then it just compounds from there. Once someone runs their outbound on Bavlio, they don't really churn. They end up growing, they add seats, they add volume, they turn on more channels. So the revenue expands inside each account on its own. And by year 3, I want us at 10,000 paying customers. And here's how we get there. We dog food Bavlio. We run our own outbound on Bavlio to reach the next founder who needs it. It's marketing led and self-serve by design because really at $49 a month, there's no room for a sales team. So the product has to sell itself. And every customer is, however, proof that it works, and our cost to acquire stays very low. We also run the company itself on VentureFactory, which is our operating system for essentially everything outside of product and customers, which is how just the 2 of us on our founding team are able to stay this lean. And 3 to 5 years out, fingers crossed, Bavlio is the default outbound tool for founders. And it's the first thing that you reach for when you start a company, because outbound is going to be run by agents, and we intend to be the agents that run it. Thank you.
Fantastic. What a great way to end. I thought it would be right that we get the youthful energy in at the end. And Adam has been a rat a minute to work with. What I'm excited to see now is those numbers at the end. Good job, Adam. I actually start to believe them, and that's really cool. So for those of all of us, before I do a thank you, and I hope I've responded to every single message. I think I have. I hope I have. If any of you got any lurking questions from this, either sign up to the VentureFactory. For God's sake, do that. There's a free plan. It doesn't matter who you are. Sign up for the free plan. It will help you build whatever it is you're building better. That I promise you. The thing I like about the Bavlio team is they really do live, breathe, eat this dog fooding their own product, which is something we really passionately believe in. And we make sure of across VentureFactory. We don't just dog food the VentureFactory, which we really do. We built LettsGroup with the VentureFactory, and it's efficient, it's effective because of it. But we also dog food all of our core apps as well. And we dog food things before they go to others. So we're just going to start a process, Adam. I think we're in the calendar in 10 days for us to start dog fooding Bavlio with LettsGroup for its needs before we start having a conversation about bringing Bavlio into our core apps and then making it available to all of our VentureFactory users. So I'd like to thank all of our speakers first, and I'd like to thank all of you that have sat in on this. This is our second Let's Talk Tech. It's our first one that is online, which we had to do because a lot of our partners now, and they're growing, are international, and a growing number of our venture customers are international. So we're going to keep this theme. We're going to do the next one is in November. As I said, for goodness sake, if you want to put yourself forward to speak at that and you're not on the VentureFactory or to be a presenter, sign up to VentureFactory. As I said, it's free, and then just message us through the feedback, which you'll find in the dashboard. We had 5 showcases. They're all different. They're all at different stages. We've got some pre-seed, we've got some seed, and we've got some traveling hard towards Series A. Our job at VentureFactory is to make your job easier, smoother, and scale better for you, so that you can keep your teams lean, mean, and founder mode, so that they really throw themselves at the challenge. And our job as we go forwards is also to help you with the capital side. And that's a big, interesting step for us as we go into 2.0 and beyond with VentureFactory. Thank you, all of you that have joined us. Thanks. You come from lots of different places. If you want any follow-up questions, just email hello@lets.group. That's hello@lets.group. And if you want to sign up for the VentureFactory, just go to www.lets.group. And we're happy to help any of you to fulfill your dreams. Have a great night. Well done. We've kept you bang on time. It's 6:32 right now. And look forward to talking to you all very soon. Thanks a lot. Bye-bye.